One of the biggest questions I've asked recently is, John, what is going to happen going forward? We just had the Fed raise interest rates more than we've seen in almost 30 years. So does that mean that rates are going down or up? Does that mean housing prices are going down or up? So I want to take a minute and just explain to you what I'm thinking. First of all, I do not have a crystal ball. I don't know what's going to happen, but I try and listen to a lot of super smart people and put my own read on it. Here's what I see happening. I've said this a couple of times before. Heading into this summer, I think we're going to see a bit of a seizure, a bit of a freeze up of the real estate market. I think sellers are not realistic right now on the fact that prices are coming down some. And I don't think prices are really coming down much. What's happening is sellers are overconfident. They're used to being able to sell a house for significantly more than the last house sold for and not have to do any repairs or not have to give any concessions, credits to a buyer. And the fact is that market doesn't exist now. In most cases, we're in a market where we have very few buyers. Now, I want to talk about a simple economics of supply and demand. So supply is how many homes are available for purchase or even for rent. Really, there's people that need to move into a house. Are there enough houses for everybody? The answer is no. And the fact is it's going to get worse. Matter of fact, let me just say that in a different way. It's not going to get better. Everybody thought that, hey, the builders are now going to be building homes again. Builders stopped building homes in 2007 because the market crashed and they were stuck holding a bunch of completed homes that nobody could buy. And so the builders didn't start building again until around 2014 to 2016, and they've been ramping up and up. The last 2 years, builders have been super aggressive in building. The problem is 2020 and 2021, builders couldn't get the supplies they needed to complete the homes that they wanted to complete. So instead, what happened is builders were pushing out construction dates and they were fighting and paying a whole bunch of money for lumber cost. And then we hit 2022 and we have interest rates took off like a rocket. We went from 3% to 6% in the last 6 months, the fastest increase we've ever seen in interest rates in my 22-year career. And builders are afraid of a repeat of 2007 where they're stuck with homes that they cannot sell. Let me make something really clear. A homeowner who's selling a home right now, they have some cushion because the homeowner has the ability to say, hey, A, if I don't sell my house, so what? I just stay there. I got to pay to live somewhere. B, the homeowner has cushion because they bought the house for X and values have gone up. So they have some cushion that if they had to give back a little bit of that, there's room for them to do it. Builders don't. Builders have two problems that homeowners don't have. First of all, builders have fixed costs. Fixed is the wrong word. They have increasing costs because they're paying for labor and inflation is causing labor prices to go up. They're paying for materials and the supply shortages we had have made their materials costs go up significantly. They cannot just decrease the price of the home. And the second thing that they have is a significant carrying cost. When they are finished building a home, they're supposed to pay back the construction loan almost immediately. There's a term called curtailment. Curtailment means that the bank is saying, we're going to charge you extra. We're going to charge you some penalties because you didn't perform in the timeline that we expected. The performance in this case is the builder paying off the loan as soon as the home is built. Because if you really think about it, the longer that home sits unsold, the more likely it is to have a price reduction and the chances that the bank could lose money. And so the bank set the rules to make sure that they're at least incentivizing the builder to sell it as soon as possible. Builders have decided, we're done. We're slowing down. Let me say it that way. They're not done. They're slowing down. I've seen report after report over the last couple of months proving that construction starts, new cost of materials, everything is showing that builders have slowed down how many homes that they are building. And they're going to continue to build at a very, very slow or reduced pace because they don't want to be stuck holding the bag if the market turns and we start losing significant value in homes. So let's go back to supply and demand like I talked about. Our supply is not enough and builders are not building enough to get our supply up. What we experienced over the last 2 years was a huge amount of demand. Rates were super, super low. And we had a lot of buyers who were coming of age. Millennials who decided, hey, maybe I didn't want to buy when I was 25, 10 years ago, but now I'm 35 and I do want to buy. Or those that just graduated college and now it's time to have a family. Those people are saying, I need to rent or I need to buy. That's creating demand, but supply was low. That caused prices to skyrocket. Now, supply hasn't changed. Demand is going down. Think about this for a second. With increased interest rates, everybody's like, you know what? I'm out. I'm not going to take a chance of buying a house. I can't afford to buy a house with the fact that interest rates have gone up. I'm done. I'm pausing. That has taken demand down, and now we're entering a balanced market, maybe a little bit imbalanced. We're not sure where it's going to end up. But the fact of the matter is, as soon as interest rates come back down again, demand is going to increase and supply is not. The builders aren't building. And when demand increases, when everybody says, okay, cool, rates are back down below 4%, that's a comfortable number for me, I'm willing to buy a house, we're going to get back to where we were in 2020. Hear my words. We are going to go back to the price bidding wars we had in 2020 and 2021 as soon as interest rates fall again. When are interest rates going to fall? I don't know. But a recession is likely because of how much the Fed is increasing short-term rates to slow down the economy. That's going to cause a recession. It's a question of when. When rates go back down, everybody says, okay, John, now it's time for me to buy. Great, but you can't get your offer accepted because you're competing with 30 other people. So hear me clearly. If you are buying an owner-occupied home and you are planning on staying in that home for at least 5 years, it is the perfect time to buy right now because you're not in competition with a bunch of people, especially if maybe you don't have a lot of money for a down payment and you need down payment assistance. Maybe you're in a position where you own a home, but you want to sell that home and buy something else. For the last 2 years, it's been impossible to get your offer accepted because you were contingent upon the sale of your home. Now is the time when demand has come down to match supply. You have the opportunity to negotiate. The seller of the home is willing to negotiate, more willing to negotiate, and you are likely to be able to get an offer accepted where you're selling your home at the same time. Now you're going to say, John, that's silly. Why would I want to trade my 3% interest rate for a 6% interest rate on a new home? Because you can refinance that when it falls back down to 4 or 3 or wherever it goes. But if you waited until rates go back down to 4 or 3, you won't be able to sell your home and trade out for the other home. So you are much better off biting the bullet now, taking the next couple of years of having a little bit higher monthly payment. By the way, that extra interest gives you a bigger tax write-off too. So it's not the worst thing in the world. And now you're putting yourself in a position to refinance later when the markets come back to life because interest rates have fallen. So let me summarize this super simple. If you are thinking, I want to time the market and I want to wait until interest rates come back down, when interest rates come back down, there'll be a lot of competition, prices will start going back up again, and it's going to be hard to get your offer accepted. If you're in the other camp that says, hey, you know what? I think that housing prices are going to drop. So I'm waiting for housing prices to drop so that I can pay less for my house. Well, guess what? The only catalyst that's going to cause housing prices to drop is if interest rates keep going up. Because if interest rates go back down, we're going to see the supply and demand change like I mentioned over the last few minutes. So let's assume you're right. Let's assume we do have a 20% drop in house prices. But guess what? That is going to be coupled with a significant increase in interest rates. And if you have a 10% mortgage rate, your payment is higher, even if your purchase price is lower. And I can run those numbers for you. But the fact of the matter is, if interest rates go from 6% to 10%, you're going to pay more in a monthly payment than what you've saved because the house price dropped by 20%. Now is a great time if you're buying an owner-occupied property. If you're looking to speculate, if you're looking to flip, if you're looking for investment properties, I don't know if it's a good time or not. But the fact of the matter is, it's about finding the right home for your family. You're paying for a mortgage no matter what. The question is, are you paying for your own mortgage or for your landlord's mortgage? Thanks for listening. If you have any questions, give me a holler. I know I'm here to help you with your home financing needs, and have an amazing day. Bye-bye.